Clayton, how are you? Had a couple questions for you. Actually, one big question. As the market shifts and the interest rates go up, do you still have the same view of direct single family rental real estate being better than other potential real estate investments like syndicates? Some of the things I see are syndicates, get you into some bigger multi-door opportunities with low interest rates and the ability and flexibility to grow your investment. But I also realize the downside you might have in mind in terms of losing control and things of that nature. As I look at new investments with single family rentals, the interest rates are getting to a point where the cash flow is less and less. So I'm just wondering, as the market shifts, where your head is right now around, direct rentals with single family versus multifamily or even commercial opportunities. Thanks a lot.
Thanks. We're in obviously a shifting market as the Fed continues to increase interest rates. Here we are. It's the beginning of August right now. It's a really interesting time as we head in towards, the fall of this year. Look, as we've talked about interest rates here on the show before, interest rates are, yes, they are up, but in many ways they are maybe where they should have been if the Federal Reserve didn't keep things artificially low, creating really a perversion in the market, right? That's exactly what happened. The reason we've had this, crush of inflation is because of this printing of money and perversion of the market. That's bottom line, right? Any expert will tell you that. Worth their salt will tell you that. So when I look at single families, and I look at some of the big hedge funds there was a Wall Street Journal piece just recently talking about how these big hedge funds are moving as quickly as they can to try to build brand new construction single families and duplexes for rentals, where they're seeing the most upside from a rental perspective and, a cost segregation analysis perspective and a tax shelter perspective. I think the thing that you just don't get you're involved in syndication deals. It's very difficult to get the type of access to the tax benefits and the advanced tax saving strategies that you get from direct ownership, having a single family or a duplex property, being able to do cost segregation analysis, being able to accelerate that depreciation, all of those things, and getting that money back on your taxes. And so while you've got slightly higher interest rates, 1, 2, 3 percentage points higher than normal, as long as you're creating that environment for yourself where you're creating equity, adding to your net worth, and yes, also creating a tax shelter, interest rates change and refinancing is an option as those things change down the line as well. I will say non-recourse financing is proving to be a fantastic vehicle right now. So we work with a lot of non-recourse lenders on our new construction properties. And because, typically those had been a little bit of a higher interest rate, but it's actually turning out to be lower in some situations than the conventional financing now, which is plus then you're able to buy it in an LLC, locking in this added protection and also locking in the fact that it's not having to come off your own personal name. So I've been through these ups and down cycles before, JD. So I just don't like jumping from one segment of real estate to another simply because market shifts. I just don't think that when I look at commercial real estate and I look at 100-unit apartment complexes and things like that, or 50-unit apartment complexes, to me, you're jumping into an entirely different kettle of fish when you jump from single family residential to commercial. You're looking at that property and thinking, how can I add value to this property? How can I build a courtyard or a pool or a common area? How can I increase the value of this property and make it more appealing to tenants to increase the rents? Or maybe I'm doing forced depreciation in other areas to increase the rents, So all of these things are very difficult in this environment, especially with commercial real estate. I still see, if I'm looking demographically and I'm looking at the data, I still see, to me, the biggest upside is in residential real estate. The demand is with people working remotely, with people moving out of big cities. with crime rates going exceedingly higher in big cities, I want to be moved out into the suburbs, away from those zones. And to me, residential provides the biggest upside. Living in the suburbs, no one wants to live in a 100-unit apartment complex. Okay, people want land. People want to walk their dog. People want space. And having small commercial properties is more transient for tenants. Tenants, higher tenant turnover, and you're having people that are constantly burning and churning. I'd much rather be in neighborhoods where we have great school districts, where the tenants are going to stay for a number of years because they want their children to go to that school district and stay for a long time. So those are a bunch of things that weigh on me. Look, we're constantly looking at the data, but it's never enough for me to like jump ship and want to like start investing in 100-unit apartment complexes or doing syndication deals again. That's not to say, different funds and different syndications can't be exciting. It just has to be the right thing. I'm just not a one size fits all kind of person, JD. I look at all of these things and I say, well, the bulk of my portfolio is going to be single families, and it's going to be continuing to be. We just bought another one, so it's going to continue to be my strategy. Single families and duplexes. That's my strategy. It's worked for me for 20 years. It's going to continue to work. It's working right now. It's providing great cash flow for me right now. It's providing great tax benefits for me right now. Just a little bit of an interest rate hike is not going to make me jump over to something else. That's just how I operate. I've seen it too many times. People chasing shiny object stuff and they get burned trying to do that. So thank you for that question. You can leave us a voicemail question by going to morrisinvest.com. That's MORRIS invest.com. Click on the little microphone icon in the lower right-hand part of your screen and fire away your questions. Now go out there, take action, become a real estate investor. I believe it's the number one way to build wealth. We'll see you next time, everyone.